Hi, this is Mark with ValueCharts.com. We are looking at a daily chart of the S&P 500 stock index, and we're basically noticing that this market has been in a channel here for the last couple of weeks, and to me it looks like there's a good chance that we could be seeing this market peak out right here and head south. So basically what we've done is we've now, penetrated the highs here, the most recent highs. I'm going to just draw a line here across that. We've come across those. We are now trading in the moderately overvalued valuation level. We can see by the very top yellow portion of the price bar there, and we are basically looking at I'm going to go ahead and clear this out to look at the consistency of some of these cycles that we're seeing on the cycle finder below. So the cycle finder has been fairly consistent here, we can see with the cycles, and now we're heading up into a situation where the cycle strength is lower. So we're seeing that it's lower than the previous strength as of right now, and we're projecting forward with the possibility that this may be something that starts to head downward here. And what we want to see essentially is really beginning today or tomorrow, a red histogram bar start to form, and then several red histogram bars after that. So we're really looking for this market to start turning south here as a potential selling opportunity. Now, in fairness, this may not happen. This market could very well be heading up to retest the highs in recent weeks at around the, low 1400s area. Let's see if we can actually read that. Maybe 1422 looks like. So there's a good chance that we're heading up to that level to retest that and take out all the stops, as the market tends to sometimes do. But the case right now for this pattern we're seeing, this corrective pattern in the dailies, would suggest that there's a pretty good chance we may see some down action here. Now, looking down at the MQ momentum indicator down here at the bottom, we would expect to see this indicator start to roll over here very, very quickly if we're right in the assessment that this market is looking for some sort of short-term top here. So this is a fairly low-risk play. Let's go ahead and drill down to maybe 60-minute charts and take a look at that as well. Now, this paints even more of a compelling picture right here, because we have essentially this upsurge here that we've seen in prices, and now this secondary upsurge has weakened quite a bit. And this is, again, evidenced on the cycle finder indicator. So we've got a strong surge here, a much weaker price surge follow through once we're in new highs. And this again suggests that we may be at a very attractive low risk selling point here in the market. So we'll continue to watch this and see, but for anybody who's interested in taking a potential low risk trade here, this could be a very low risk trading opportunity. We probably don't need to risk more than maybe 5 points or so from this level, which is at 1398, and really can manage a very, very tight stop there. If somebody's interested in riding out a longer term potential trend to the downside, we always recommend using stop placements based on entry price, 1 to 2% above or below. In this case, we're shorting the market, so it would be 1 to 2% of the price level. Right now, 1% of the S&P price level would be right around, call it 14 points. So if we wanted to add 14 points onto our existing price level, we could. There again, if we're looking to short this specific 60-minute bar, we'd like to see the red histogram bars for the next bar start to form in the cycle finder indicator. We'd also like to see that the momentum indicator turn bearish or turn down here, where we start to see red histogram bars in this as well. And then last but not least, the trend indicator here intraday, we'd like to start seeing blue bars and then eventually red bars. So we're using these indicators below as confirmation to really confirm that what our trade direction here is correct. We'll continue to follow this market going forward.